Bye, have a great time.
ADR, this is King Black, and I titled this video Paying Back Student Loans Part 1. So you finally graduated with your degree, or you didn't if you dropped out. And soon you will have to start paying back any loans you took out. Usually you will have one 6-month grace period when you stop studying, meaning whether you graduated or you dropped out. During this time, if your loans are subsidized, it means that the government is still paying the interest, even during the grace period. And any money you pay towards the loan goes straight to the principal, which I recommend because it will lower your overall minimum monthly payment, and it also lowers the amount of interest you will have to pay. It lowers the total amount of interest dollars you will have to pay because the amount of the principal will be lower. If you have multiple loans, definitely consider consolidating them so that instead of making multiple small payments, you can make just one payment to one place. Have any additional overpayment above the minimum applied to the loan with the highest interest rate, which overall again lowers down the amount of interest dollars paid over the life of the loan. If applicable, sign up for auto debit or auto pay. Many lenders even offer an interest rate reduction. So let's say you have 5 to 6 different loans, and if you sign up for auto pay, they offer a 0.25% deduction in your interest rate. Or 5 to 6 loans, that in total that's over 1% less you're paying in interest. And it saves you money. So why not? You don't want to pay the government any more money than you have to, right? So take advantage of this when and if it's available. One thing you never want to do, no matter what, is default on your loans. 3 things can happen. At least 3 things off the top of my head I can think of can happen. First, it can destroy your credit score. They can garnish that sweet tax return. So that means when you're looking forward to that $3,000 to $8,000 back in April, you're not getting it. It's going straight to the government if you're in default. Also, when and if you have to collect Social Security, retirement, or disability benefits, they can take the check to pay the balance. So keep those things in mind. Don't be afraid, no matter what, to call your lenders or your loan service provider if you are having financial trouble making the payments. They would more often than not rather work with you and get some sort of payment than get nothing at all and no communication from you. Not only does this debt not go away, even if you declare bankruptcy, it stays with you. But if you ignore it, it only continues to grow. And what I mean is, the interest keeps getting accumulated, added to the principal balance, then interest is charged on that new principal balance, and it just keeps ballooning the more you ignore it. After a few years of non-payment, some people have seen the amounts they owe almost double their original loan amount. So if you took out 10 to 15,000 in student loans and you don't even make a payment in a couple years, it's not unheard of to all of a sudden see that your new balance is over 20,000. And if you couldn't pay the loan before, even less of a chance are you going to start paying it then. So always maintain communication with your loan providers. In many cases, they can offer forbearances, or there's even a new repayment plan called income-based repayment, which means based on your disposable income. Let's say that your regular minimum monthly payment is $200 a month, but you can't afford that, and they see that your take home is only about $1,000 a month. Now they might only say, okay, given your current financial situation and your bills, you got car payment, insurance payment, rent, water, utilities. If you have kids, you got the kids things to buy. So they'll say, okay, uh, in order to keep your account in good standing, you need to pay at least $20 a month, and that's a much more manageable amount than $200 a month. And once a year, just like people who take out food stamps or whatever, you will get a revision to see if your financial situation has improved, and if so, the minimum monthly payment might go up a little bit. If your situation got worse, well, the minimum monthly payment may be less. But you should always at least pay the interest on your loans, so that way your balance is constantly growing. And this is only part one, part two coming soon.